Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, July 8th, 2009. We start today's broadcast with a look at the yen, which saw very strong gains against its rivals, especially in New York trading. The dollar-yen pair, for example, slid overnight to important support at the 94 level. As U.S. stocks fell into the red in the New York morning, the yen plowed through that support, falling to the 91.80 area. That was about a 300 pip drop from its open, and is the lowest the pair has been since mid-February. The pair bounced back from that sharp fall to trade near 92.80 in the New York afternoon. Other yen crosses saw heavy moves in favor of the yen as well. The euro-yen pair, after sliding about 100 pips to the 130.90 area prior to New York trading, dipped another 375 pips to the area around 127. That tested support from May 19th. The pound yen, which showed similar price action, fell almost 600 pips during today's session from high to low. Since last Thursday's U.S. non-farm payroll data, the markets have shown strong risk aversion as traders changed their outlooks from a more optimistic one in the second quarter to perhaps a correction of those expectations now to start the third quarter. Moves in other pairs were not as severe as in the yen crosses. The euro-dollar pair fell today in favor of the greenback, testing the area around 1.3835 as the theme of risk aversion continued to dominate. U.S. stocks are down most of the day today, but not in any kind of free fall, and the Dow and the S&P actually rallied into positive territory prior to the closing bell. That gave the euro a chance to cut some of its earlier losses. Earlier in the European session, data came out showing better than expected German industrial production. Looking at that data, industrial output in Germany rose 3.7% in May, the largest jump in production in nearly 16 years. Of course, the economy had been in a sharp contraction, so there is more room to make up. The data points to a turnaround of the inventory cycle and may be one of the first clear indications that Germany is beginning its recovery. Data from the UK showed housing prices sliding 0.5% in June, a figure that was below forecasts. On the year, prices were 15% lower, which is the smallest annual decline since November. Therefore, the report is a mixed bag, though it did state that the annual and quarterly figures provide evidence that the underlying pace of house price declines is easing. The pound-dollar pair dipped overnight, extending its losses from yesterday. The pair slid further in New York trading, pushing slightly below the 1.60 level. The UK housing data did not help, as it can imply that the sector's recovery may be slower than expected. The Bank of England meets tomorrow, and there is speculation that there will be talk of an extension of the bank's quantitative easing program, another factor which pushed down the pound. Similar to the euro and others, the pound did stage a late rally. In Australia, home loans rose 2.2% in May, following a 1.8% rise in April. It's the 8th month in a row that approvals have increased as a result of low borrowing costs and incentives to first-time buyers. Also, today, consumer confidence data jumped 9.3% in July, which showed that consumers are feeling optimistic about the prospects for the Australian economy. The Aussie yen, a major player in carry trade, slid sharply despite the better housing and consumer confidence data from Australia. The pair, after breaking a line of support at the beginning of the session, plummeted about 400 pips to set an intraday low near the 71 level. The US dollar-Canadian dollar pair rose to a 7-week high above the 1.17 level in today's trading, popping above the resistance level of the most recent upward sloping channel. Though we mentioned how US stocks fared today, oil and gold prices were down 4.4% and 2% respectively, which pressured commodity currencies. The late rally in US stocks did help the pair to fall back to the 1.1660 area. Looking at upcoming releases, tonight, Australia posts data on unemployment for June. Overnight, Germany releases its consumer prices and trade balance figures. The UK, meanwhile, will also post its trade data along with its leading index, which will be followed in early tomorrow's by the Bank of England's interest rate decision and statement. Tomorrow, the US will release its weekly jobless claims, along with data on wholesale inventories, while Canada posts its housing starts for June. And that's it for today's recap. Thank you for watching us here at CMSFX.com, and happy trading.